Good afternoon. Today's topic of discussion is going to be a Las Vegas real estate market update for April 2013. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. So the main focus of today's video is going to be going over Keeping Current Matters. This is a fabulous publication that's put out monthly. I would love to share it with you. We offer this as a free tool to our clients and consumers. I'll tie in at the end of the video here on how you can receive this. So what I'm going to be doing is taking January's edition, February, and March and kind of blending them together, tying that into the investor portion of the market, the luxury portion of the market, first-time home buyers, and move-up sellers or buyers, because it's really different market segments, and I believe we need to break it down into those segments to give the best clarification. So let's get started. So as noted, this is the Keeping Current Matters. Most of this data is going to be from the March 2013 edition. As many of you are aware, pending home sales are on the rise. This is a national trend as well as a local trend. Right now we have approximately 12,500 units in contract in Las Vegas and only 3,900 on the market. If you could break it down to single-family homes, we have about 10,500 homes in contract and only 3,000 actually for sale, and this is on the rise. The month's inventory of homes for sale, you can see nationally this has gone down drastically. A healthy market is about 5 to 6 months of inventory. You'll see that we have currently in Las Vegas, we only have about a 1.1 month supply of inventory. If you include the homes in contract in the available supply, we're still under a 5-month supply of inventory. This is where it gets a little tricky. We have a lot of short sales and foreclosures that are pending the approval of the bank on the short sales. So our pendings are much higher than they normally would. And we're only selling about 3,000 homes a month right now. We normally would sell more like 5,000 to 6,000 homes. So we have a shortage of inventory to sell as well. So this month's supply is not the most accurate data. But to summarize, we are heavily in a seller's market right now. The inventory level is very low. As I noted on the previous slide here, you'll see that the month's supply, if you're in 1 to 4 months supply, you're in a seller's market with an appreciation in pricing. We're on the lower end side of that, about a 1 month supply, so appreciation rates are going through the roof right now in most sectors of the market. The luxury is a little different, and we're going to tie into that in a moment. This slide's fantastic. It really breaks it down by quarter. You know, as the inventory started to decrease, it's just the supply and demand, right? You'll see in the mountain region, the first quarter saw prices go up about 0.47%, second quarter about 7%, third quarter up 10.47%, and in the fourth quarter up 14%. As of right now, in the last 12 months, we've seen about a 25 to 35% in the pricing in the Las Vegas market as a general market trend. Year over year, as of February, you'll see in Nevada, we have seen about a 20% increase in the pricing. The only market that's seen a stronger appreciation rate is Arizona, just slightly higher than Nevada. They're at a 21.6%. Here's the big question. Where are home prices going to go in the short term? You know, the Case-Shiller is projecting some stability, perhaps a slight slip, but it's really hard to tell. I'm going to finish this video giving you my professional opinion on where I see home prices going in the next 12 to 16 months. But let's get through all the data first, because that'll help us be on the same page here. So when I summarize it, it should make a little bit more sense. I thought this was a great graph to share. Bulls versus bears. You know, we're looking at the overall projection of pricing. You know, the overall market, they're seeing about a 23% increase by 2017. On a bear market, 11%. A bullish market, 33.6%. You know, as I stated, we've already seen over a 30% increase in pricing since 2012. Let's now talk a little bit about the first-time home buyer market, or buyers coming into our market, not localized move-up buyers. There's a great urgency being felt by the buyers. Redfin, many of you are probably aware of this website, they did a survey and they're saying that the percentage of buyers who believe prices will rise in the next 12 months, in the fourth quarter survey, up 71%. So the urgency's there right now for buyers. In addition to that is the interest rates. Interest rates are at historic lows. A 15-year mortgage right now, fixed is under 3%. That's expected to tick up a little bit. We're supposed to see rates go up about a point perhaps this year. Impact of the increasing rates, this is great here because it really shows you the impact. If you're on a budget and you're looking to spend about $200,000 and the rates go up a point, that's about $114 a month more you're going to be paying, and then factor in appreciation on top of it. So the urgency is there for the buyers. Another great graph, Gen X and Gen Y, this is where it shows the appreciation rate and a rate increase. $262 per month in savings. You calculate that over a 10-year period, that is a massive savings for most of these buyers, creating the urgency in the buyers and willing to pay over appraised value or waive appraisal. Also looking at the hottest months for online housing by state, you'll see here that the March-April timeframe for Nevada is our hottest months online, which makes sense. The summer months are our biggest months for sales, so you pair that with the urgency already in the market, it's really creating, quote-unquote, the perfect storm for sellers looking to capitalize on this market we're having right now. We're going to tie into that right now with the move-up seller. We have a lot of our clients that right now are looking at selling their home and moving up or moving down. This is a great graph. It shows the net gain on a move-up seller. Even if you were to take a 20% loss on your home versus what it was worth during the peak and you were to move up, in this example, your net gain would be $30,000. So if you're considering making a transition and selling your home and making a move up, this is an optimal market to try to capitalize. Move up buyers coming into the market, this is a good data here. 75% of the move up buyers are looking for significantly bigger homes, say same size, move across town, or same size but nicer. And that's the trend we're seeing with most of our move up clients that are selling. The luxury market. Going to have another video that ties into this. This is luxury specific. This video will be in the description at the end of this video as well, where you can get more information on the luxury market specifically. But in summary here, the million-plus market in the West region, we've seen a 67% increase in the last year in sales. And nationally, it's up drastically. Look at the Northeast, 71% increase. So that's a huge increase. And our sales at the million and above is, we've seen a doubling in sales since last year. It's really a drastic turnaround. Really quickly, I want to tie into the investor market and just be straight up and honest and open with you here. If you're looking at investing, you can still get into the market and get some deals, but you really missed the boat. You should have been in about a year and a half ago. But I'll tie into the end of where there's going to be some opportunity for you investors to still capitalize. But this graph just shows, over the last 13 years where most of where the best return on investment's been, and it's by far, hands down, the real estate market as a whole. All right, let's move on to some other data that I think is going to tie into the summary here. Shadow inventory. I'm just going to read this slide to you. Shadow inventory never hit full force. So now I think we're at a point where the pendulum has swung completely the other way and the housing market needs more inventory. So 2013 would be a serendipitous time for banks to release that inventory. We expect 600,000 REOs in 2013 and short sales to exceed the 2012 number, which will likely be around 1 million units nationally. Where's the hardest hit foreclosure areas? Well, this graph shows it here. Obviously, Las Vegas is one of them. And we're going to be tying into that since the focus of this video is going to be the Las Vegas market. This is a very interesting graph here. The main focus is going to be the left one here since we're focusing on Las Vegas. Look at the decrease in the amount of foreclosures. There's been a bottlenecking of the foreclosures from 2009 to look at currently. It's down drastically. So before I give you the summary, I just want to show you, tie into a couple of articles that we've recently seen. These articles are going to be linked in the description of the video. Let me just give you the title. Nevada's foreclosure starts soar 334% in February. So the Nevada foreclosures have gone up 334% in February from a year prior. And the summary on this article is, hey, we have a lot of notice of defaults being filed again, and we're going to see more foreclosures coming online. Finally, the last article is Las Vegas new home sales surged 94% in 2013. They are going to capitalize on this as well with the low inventory levels. In summary, we've got a lot of inventory that needs to come online. When a notice of default is filed, which is what we're starting to see an increase of, that is a foreclosure or inventory coming in the next 6 to 9 months. What that means is our inventory levels are going to stay low. We're going to see prices come up as much as 10-15% this year with low inventory levels throughout the year. Inventory should go up in the fourth quarter into the spring to summer of next year. Those looking at investing, you're going to have to be very strategic in looking for the right properties that come online as short sales most likely and capitalize on those. If you're looking to make a move-up transition, it's very important that you get very strategic about pricing your home right to capitalize on the prices now and being able to get into a property while the inventory is low. It's going to be very tricky for you, so reach out to me. We can pace you on that and work you through that process. Luxury market. That market is starting to warm up a lot. If you're in the 1.5 million and under, there's a lot of opportunity for you right now to get your property on the market and sell it, downsize, upsize if you're looking to. In summary here, AB 284, that law that went into effect last October, has bottlenecked the foreclosure. This inventory is going to be coming back online, and we're going to see a big shift in our market coming next spring. So if you're considering selling, now may be the optimal time to do it. If you're in the market buying right now, you have some challenges ahead of you. Unless you're paying cash, it's going to be a very challenging road ahead. So reach out to me. I'd love to advise you, have an educated conversation on what you should be doing specifically based on where you're at in the market segment. The Keeping Current Matters data. Just respond to the video here saying that you'd like to receive it. We'll send you a direct message, and we'll make sure you get a copy of this every single month as it comes out. This is Dale Snyder with the Snyder Group at Keller Williams Realty, giving a Las Vegas real estate market update, April 2013. Have a fantastic day.